Hey everybody, Sive Morten here with the Forex Peace Army.com. Let's have a look on the gold market. So on the gold market, it is a bit easier to understand what's going on, to control overall situation, because we have a clear pattern. On the 4 time frame chart, this is reverse head and shoulders, and it could be used as for the bullish as for the bearish purposes. From the bullish point of view, it's a direct action, so market has to turn up right from the point where it stands right now to keep the bullish context. Correspondingly, if it will not happen, then it takes the bearish sign, and we should be ready for a breakout or 44, 43.50 area and keep going lower, probably to the bottom, because on a daily chart the nearest next support will be around the bottom, because market right now stands in 44, which is actually the 618 support already. So that is how we will use this background. Simultaneously, on the daily chart, we have minor grabber that has been formed, and that was the reason why we suggested that here's market could start operation. At least grabber accurately corresponds to the idea of the hand and shoulders. Today, our situation is slowly changing, so we see more bullish signs on the dollar. We see a bit choppy and bearish performance, heavy performance on the euro currency. Bitcoin, as you can see, it's in general falling below the floor already, and that makes the pressure on the gold market as well. And the next spiral of the conflict in the Middle East makes supportive for the dollar and makes pressure on all other assets. So currently, probably the riddle should be resolved in the nearest few hours, I suppose, because on the 4 time frame chart you could see what's going on. That was great pullback from the support area that we discussed. Great action with the grabber that we said. It starts as well, but as the new escalation become, you can see what is happening. Market right now stands at the edge, so in fact, this is the last points, last output for the bulls. If they will be able to stay above this area, they keep chance on the forceful reversal. If not, market will start dropping. Failure of the hand shoulders automatically suggests drop below the lows, and in the most cases, on the ruins of the hand shoulders, in the most cases, the butterflies appeared. So it will be at least drop to the 43, or even more extended drop to the 42.25. Once these start falling, chances that this will fail really high. On an hourly chart, as you can see, the same story. So market holds here. This is potential butterfly that might be formed if it will able to hold these lows, but the chances for that now looks not too high. In fact, this is the pain or gain situation. The attractiveness of the current situation is that price stands very close to the invalidation points. Usually, I call this type of combinations as a culmination points. They will not provide you great chance on success, but they give you the best risk reward ratio, and they give you points with the lowest lowest cash risk that you could actually get, because your reward will be huge, your risk very small, because you need to place stop just below these lows. That's it. So since this might be resolved just in a few seconds while we're preparing this video, I don't know whether it makes sense to talk about this or not, but in fact, on a 15-minute chart, you just could keep an eye on the situation, how it behaves until market stands above these lows. Potentially, you could, if we suggest that market will find some sources to show some pullback in response, theoretically, you could try to catch here some head and shoulders pattern, right? So it might be shoulder, head, another shoulder. If it will be formed, that will be at least something that you could use for a possible position taking, if you consider taking longs. In the current circumstances, take long position blindly without the patterns. It's not really good idea. Better to rely on some particular patterns that could justify where to place correct stop order. Of course, if you would like to just make it like a gambling, with the taking position with the stops below the lows, taking into consideration that overall risk will be very small, theoretically you could try to do this. But if you if you do not do this right now with this placement of the price, next time it's better to consider still some pattern that could confirm the chances of the upward action and let you to place your tight stop. So let's just keep watching for the bears. For the bulls, just keep an eye on this one. Control that market stands above these lows. If both conditions will be completed and daily grabber also will survive, then you accurately could try to gently think about taking long position on the possible patterns that may be formed here. That's for the bulls. For the bears, nothing to do yet. You could just see what is going on. Once market will drop below this area, that will be signal for taking the short positions. Market will continue moving to the downside. Of course, you could try to use, for example, stop selling orders here around the lows, suggesting that the breakout will accelerate. But I already explained it many times that it has its own risks. Risks of the Russian rings, that the market could just grab stops below this and return right back up. It's also possible. Although we will not get the butterfly shape, but it will keep chances on a possible pullback. It's also possible. It is also might be an option. That's why they're using the break-in stop orders, entry stop orders, not for everybody. The most conservative approach is just to be sure that lows are broken, market is moving gradually lower, then trying to take a position on some minor rally to some of the fib levels that we usually do. So that and towards what we have on the table. In fact, the direction should be set very soon, in a few hours today probably. It will depend on these lows that we have. Either we'll keep chance on the further upward pullback, or market will keep going lower. And tomorrow probably we already will be moving on one of these strategies.